Welcome to Bayana, the heartbeat of tech in MENA. We bring you raw stories and sharp insights from the founders, investors, and leaders building the region's startup ecosystem. Today, we're taking a deep dive into something really critical for the entire MENA economy, revolutionizing SME financing. You know, small and medium-sized enterprises are, well, they're the engine of growth here, no doubt about it. But they consistently face this huge hurdle getting the capital they need, the money to actually scale. So our mission today, to unpack how one company or a finance is using tech, smart technology and clever partnerships to bridge this gap. They're taking a process that usually takes weeks, maybe months, and turning it into, well, potentially minutes. For founders, investors, anyone interested in the future of business here, this offers some really crucial insights. Okay, let's dig in.
Yeah, and what's really fascinating here is how Aura is tackling a problem that, it truly forms the backbone of the GCC economy. But it's a sector that, despite being so important, often gets underserved by the traditional ways of doing things. Understanding their approach, it gives you a valuable lens on, market opportunities people might be missing and how new models can unlock some serious growth across the region.
Absolutely. And to really get what Aura is doing, we first have to understand the scale of the problem, this crippling capital gap. SMEs are the lifeblood, right? But getting money is this massive challenge. And it's not small. The World Bank reckons the credit gap is close to something like $250 billion. That's huge. And here's where it gets really interesting and, well, painful for businesses.
It really does. This isn't just a number on a page. It shows up in really tough ways. Like, imagine an SME. They land a big contract, right? Great news. But then they hit the payment terms, often 90, maybe even 120 days. So even if demand is there, their cash flow just gets squeezed. Shahrukh Ghazali, or his co-founder, put it really well. He said, they couldn't make more sales, not due to a lack of demand, but because they didn't have the funds to fulfill new orders.
So they're stuck.
Exactly, which raises the big question.
Oh.
Why do the traditional lenders, the banks, struggle so much with this?
Yeah, you'd think with all that capital, the big banks would jump on this. Why haven't they cracked the SME code more effectively?
Well, it boils down to a mix of things. Viability, old processes. Banks often have pretty rigid minimum revenue requirements. That cuts out a lot of smaller SMEs straight away. Plus, they tend to see SMEs as, well, high risk. And often these smaller businesses don't have the super detailed audited financials banks usually want. But maybe the biggest thing, the reason the economics don't work for banks, is the lending process itself. It's manual, takes ages, lots of people involved. Credit officers, compliance.
Layers and layers.
Right, and all that drives up the cost for each loan. For the smaller loan amounts SMEs need, it's just not worth the effort for a big bank. They can't make it work at scale.
Okay, so the traditional model is kind of broken for this segment. Where does the solution come from then?
Sounds like it started with a founder seeing that gap. Which brings us to Aura Finance and its co-founder and CEO, Shahrukh Ghazali. His journey is pretty interesting. He actually first dipped his toes into entrepreneurship way back in 2011. Tried an online grocery startup in Pakistan while he was at Berkeley. Maybe a bit early for the market then, but, the idea was planted. Then he was at Symantec, then Daraz, and then made the move to Dubai and joined Careem. And that's where things really took off. He helped launch in cities people often overlooked, like Tanta, Gujranwala, led the Marrakesh rollout, launched Careem food delivery, and eventually headed up growth and marketing at Careem Pay.
And it was there, at Careem Pay, leading growth, that Shahrukh met his co-founder, Samer El-Mardini. Samer was director of strategy then. He brought this really strong background in financial services consulting, deep fintech knowledge. Shahrukh mentioned, he knew things I didn't, and I respected how he worked.
Complementary skills.
Totally. And that was key.
They both clearly saw the same massive opportunity, this huge gap in SME financing. It sounds like one of those moments where, as Shahrukh said, the timing, the team, the conviction, it all aligned.
And that alignment led to a pretty bold idea from Shahrukh, that a startup could actually succeed where the financial giants hadn't. He admitted, maybe a bit naive, thinking it would be easy, but glad they did it. His core idea was about DNA. He said, every company has a certain DNA. Banks, he argues, are great at managing capital, risk, compliance, scale. But tech, that's not in their DNA. So what does it actually mean for how Aura operates?
That DNA point is so important. It's not just about having tech. It's about being agile, iterating fast, being willing to try new business models. Banks often can't move like that. Legacy systems, regulations, embedded processes, That's why disruption often comes from these leaner, tech-first startups. So Aura leaned right into that. They built their whole operation around using smart tech to slash costs. That makes it viable to serve smaller businesses, those under that sort of AED 20 million revenue mark banks often ignore. The goal was making the unit economics work, even for, as Shahrukh calls it, the long tail of SMEs.
Oh, how do they do that?
Through a very low-touch experience, automation, a really smooth user experience, minimizing the need for people to get involved at every step. That drastically cuts the cost per client, makes even small loans profitable. And the impact. SMEs don't need demos. They can onboard themselves, get funded in a day or two.
A day or two, compared to weeks or months with a bank.
Exactly. It's a completely different world.
Okay, that speed and ease, it sounds amazing, but what were the big hurdles getting there? And let's get practical. If I'm an SME, how does Aura's platform actually work for me?
Well, the biggest hurdle was probably building the trust and the risk models needed for that speed. But for the user, it's designed to be simple. An SME comes onto the platform, they upload the basics: bank statements, company ID, personal ID. Then, the key thing, the B2B invoice they want financed. Shahrukh stressed reducing that back and forth so the system checks documents in real time. If something's missing, it flags it immediately. Helps avoid delays right at the start.
Right, get everything lined up. And once it's all in, that's where the speed happens.
Tell us about the underwriting. How fast is that decision?
That's where the tech really kicks in. Documents are in, the automated underwriting engine gets to work, and it spits out a credit decision in under 5 seconds.
Wow. Under 5 seconds.
Yeah. Now, currently, there's still a quick manual review after that, just as a final check. But the goal is fully instant decisions. Compare that to a bank. Maybe 6 weeks. It's an eternity if you need cash now. Absolutely.
So the outcome is SMEs get cash fast once an invoice is approved. They don't have to wait for their buyer to pay up. Then, when the buyer does pay the SME settles up with Aura. They're even working on automating the repayment part too, making collections seamless down the line.
That speed is incredible. But, okay, the core question for any lender, risk. How do they confidently assess risk, especially with these smaller businesses banks avoid? That's the heart of it, isn't it?
Absolutely. It's the multi-billion-dollar question, right?
Mm-hmm.
They use a smart two-layered approach, and they knew they had to get this right, so they brought in someone with like 20 years of credit experience to build their system. Layer one is the seller, the SME applying. Aura looks at the company profile, the owner's profile, checks their bank statements, assesses their general financial health.
Right.
That's the baseline.
Okay, makes sense.
Then, layer two, which is critical, the buyer. That's the SME's client, the one who needs to pay the invoice, because repayment often hinges on that payment coming through. So Aura digs into who these buyers are. They check payment history using past invoices, bank data. And this is why, for now, they have strict guardrails in place.
Guardrails? Like what?
Right now, they only underwrite invoices where the buyer is a trusted blue-chip company, large, stable firms based in the UAE. Also, no invoices from brand new buyers if the SME hasn't sold to them before or won't finance it yet. And no international buyers currently, because collecting across borders if things go wrong is just too complex.
Okay, focusing on known, reliable buyers in the UAE initially, that definitely limits risk while they build data. But doesn't that mean they might miss some of the most underserved SMEs, the ones dealing with smaller or newer clients?
That's a really sharp point. And yet, it reflects their cautious start. Prove the model, build the data with the safest segment first. But what's really interesting is this network effect that's starting to emerge, because Aura sees the same corporate buyers paying invoices again and again across different SMEs on their platform.
Ah, so they learn who the good payers are.
Exactly. Seeing buyer X pay seller A, then seller B, then seller C on time, it de-risks buyer X for everyone. It builds this shared track record. This becomes a powerful advantage, like a community credit score that gets stronger over time. The more data they gather on reliable buyers, the faster and safer future underwriting becomes.
Okay, that network effect is clever. So Aura is lending out this money. Where does the actual cash come from? How do they fund their own lending?
Yeah, that's the other side of the coin. Managing the debt capital.
Right now, Aura gets its funding from external sources. Institutional partners, angel investors providing credit facilities. They've raised over $1 million in debt financing so far. But it's complex. Each lender has different terms, different interest rates, different rules about how the money can be used.
Sounds like a headache to manage.
Totally. Sharika mentioned they were doing it all in spreadsheets until recently, which, as you can imagine, just doesn't scale.
Oh, wow. I can almost feel the pain.
Right, so they're building out a new internal platform now to track everything properly, get better control over all these different credit lines.
What was the trigger for building that platform? And why not just get one big credit line instead of juggling lots of small ones? The trigger was probably just the sheer complexity hitting a breaking point. Too many moving parts. And one big line isn't always the answer. Sometimes smaller facilities are more flexible. Maybe one lender only wants to fund repeat customers, another focuses on specific transaction types. A single big facility might be too rigid. The real challenge, Sherrick said, is making all these credit facilities work together without overpaying, meaning not having too much cash sitting idle that you're paying interest on but can't lend out.
It's a balancing act.
Constant balancing act. He called it one of the most interesting parts of the business. It really highlights how crucial capital efficiency is for any lending fintech.
Definitely. And beyond just the money, partnerships are always huge in fintech, right?
Yeah.
Especially in MENA. What key alliances has Aura built?
Yeah, Shahrukh really emphasized that how much of fintech is actually about partnerships. And Aura's strategy shows that. They're plugging into the ecosystem. So on the debt side, there's Gains, that regional crowdfunding platform. It's symbiotic. Gain finds the capital, Aura deploys it to SMEs. Nice division of labor. Then for infrastructure, they've partnered with Wafek, a big accounting platform here. That integration lets SMEs pull invoices straight into Aura. No double entry.
Super useful.
Right now, Aura is listed on Wafek's site, but the long game is true embedded finance. Imagine creating an invoice in Wafek and boom, there's an option right there. Finance this invoice with Aura.
Seamless.
Exactly. And for getting customers, they've partnered with places like Sharjah Publishing City and Sharjah Media City, hubs with lots of businesses. Aura becomes a preferred financing partner for their members. It underlines that idea. Success in fintech is about plugging into the ecosystem, less about doing everything yourself.
That integrated approach, becoming part of the workflow, seems really powerful. So they started with invoice discounting. What's the next step for Aura? Where are they going with their products?
Invoice discounting was really just step one. Shahrukh explained that building that core infrastructure, the onboarding, underwriting, payouts, collections, created these versatile rails. Now they can plug other credit products onto those rails. So looking ahead, expect things like POS financing, point-of-sale financing.
Okay.
Also, invoice factoring, which is slightly different, involves the buyer agreeing to the arrangement. And B2B buy now, pay later, letting businesses delay payments to suppliers. But the really big vision, longer term, is moving beyond being just a platform you go to. They want to be an embedded financing layer. Meaning, Aura's options appear right where businesses already are. Inside their accounting software, on marketplaces, in their POS systems, financing becomes almost invisible infrastructure.
That's a powerful shift from a destination to just part of the plumbing. But ultimately, what's the real-world impact on these SMEs?
Yeah, that's what it's all about, isn't it? Shahrukh shared this really touching story about one of their very first customers. The customer sent him this heartfelt voice note, just thanking the team, saying Aura had eased this burden they'd carried for years.
Wow.
It was a reminder that it's not just about filling a financial gap. It's about reducing stress for founders, enabling growth, giving them freedom they didn't have before. And that mission seems really personal for Shahrukh. He genuinely wants to see businesses in MENA and Pakistan too grow faster. He believes if entrepreneurs get the same financial tools as developed markets, the whole region can level up.
That's a fantastic note to end on. The potential ripple effect is huge. It makes you think, doesn't it? How could this model shake up other tough financing areas? And what does this push towards embedded finance mean for, well, pretty much every industry? Lots to consider there. For more stories like this, subscribe to Bayanat's newsletter and stay updated on the latest in MENA's tech and startup ecosystem.